should hear it. Well, we
I
should be
don't.
recording. Normally it says
Okay.
recording. I do see a sign saying recording. Okay, so I guess the note taker that my AI god note taker that was recording before was already recording. So now we're double recording.
Okay, great.
Fantastic. Okay, so Bradley is your name for real? What is your last name and is it for real?
Yeah, yeah. So my last name is Allgood. It's my mother's maiden name. I was raised by a single mom, so as I got older, I decided to take her last name and carry it on. So
That's very cool. I
yeah.
like it. Very good. Okay, so look, the topic today is your fantastic new platform and offering. We're going to go into the details of that. Tell us what that is in brief. Then I want to do a little fast background about you and about how you got into crypto and blockchain and Satoshi and all that stuff. We're going to make this like hard hitting and fast, but give us some context, and then we'll go into what you're offering, and we'll probably do a screen demo also, if that's okay with you.
Yeah, definitely, definitely.
Okay. And by the way, my,
Uh,
my style is to talk fast and interrupt. So just
awesome. I love being interrupted.
Yeah, just deal with it.
Great
Okay, so
conversation.
context first. Who are you? How did you get into crypto? Tell me about your involvement in Satoshi, and then what are you offering?
Yeah, yeah. So Bradley Allgood, CEO of Maseer. So I've been in crypto tokenization largely and special economic zones for about a decade.
Okay.
So I have tokenized pretty much everything you can imagine from gold in the ground to the future production of sports teams. I did the very first bank issued stablecoin to public networks in the US.
Really?
Um, I, I integrated a broad range of crypto projects and institutions and banks and stuff and governments. Because on the other side of my experience, I founded the only special economic zone in the U.S. You're super familiar with them out in Dubai, like Abu Dhabi Global Markets
Yeah.
and DIFC. As a public-private partnership with a tribal nation, so there's Web3 banking laws, commercial codes. Tribal nations have a level of sovereignty that's actually more powerful than states. So think anything you can see a state can do, they can do it that a tribe can do in the U.S. and,
I,
and
I,
more.
I'm super jealous because you've actually done what I've thought about and aspired to do, but it sounds like you actually did it. So,
Yeah, yeah. It was
what was that project? What's its name, and how did that happen? We're gonna dive
yeah,
real
yeah. It
deep
was
here for a second.
yeah. So Catawba Digital Economic Zone. Um, it actually happened. So right when I got out of the military,
Actually, brother,
moved.
look in the camera.
Oh yeah, sorry. Yeah, yeah, sorry.
Okay.
Yeah, so
Okay.
right
Go,
after I
go
got out
ahead.
of the military, I uh, I was part of a nonprofit. Co-founded a nonprofit that focused on special economic zones. Startup Societies Foundation. It's still around this day. Has a research institution, stuff like that. And I ended up getting pulled into a very kind of a group of people that were, heavily libertarian, at least initially, looking on creating more innovative governance around the world and also we're really big into crypto. So it kind of like drew me in into both fields at the time. And my co-founder in that, we got called up because we wrote a research paper about special economic zones in the U.S. by kind of a famous special economic zone guy called Tom W. Bell.
Okay.
And he's like, hey, this tribe wants to do a special economic zone. I don't think anything's here, but why don't you guys go look into it? And it turned out that tribes in the US have an amazing amount of sovereignty.
Yes.
They can pretty much do anything a state can do. They can create new banking laws, commercial codes, and it's approved on a federal level. And so we went in, brought in a little bit
I'm
of
sorry. I
investment.
just I just got to ask because lawyer background, it's approved on a
Yeah.
federal level, meaning the regulatory scheme is federal, or you need to get separate approval from the Fed, but not the state.
So you don't need to get any approval from a state, right? So
Right.
the only person that can regulate a tribe is the federal government. It's
Yeah.
actually like, the House and the Senate, right? They have to
Yeah.
pass laws that specifically, explicitly limit the power of tribes. So tribes by authority have gotten every power states have and more. So there's certain levels of sovereignty that they have that go beyond what states have. Um, so it opens up a lot of really creative, economic development activities. And, we decided to build a special economic zone, got it
Right.
passed through the general council. They have like a kind of it's like their form of all the tribal members voting and implemented it. So set up a banking commission, started evaluating charters. You can go and create a company there, all kinds of stuff.
are companies there? I know I know we're going to talk about your project, but you just went
Yeah,
down the rabbit hole with me because I am in Dubai, the land of
yeah.
free zones, and sorry, this is my sweet spot. I'm just curious. So are the I guess the what is the company law that applies in a Indian reservation by default? Do they have company law?
So if typically,
Mhm.
a lot of the smaller ones haven't implemented a commercial code
Mhm.
and just accept the ones of the states around them, but they can choose to do that. So the tribal commission can choose to be like, we accept this commercial code, or we're implementing our own. And in the U.S., if you're incorporating a company or you're incorporating a bank, it's at a state level, right? And then you go for different types of federal activity approvals and
Yes.
stuff like that to get like a Fed account. So in this particular case, once the tribe implements a commercial code, it can be, as long as it's not against federal law directly,
Mhm.
it can pretty much do anything, anything any other state would be able to.
And do tribal companies are they subject to federal corporate income tax?
No, no, no. Federal corporate income tax is applicable. Federal level stuff is applicable across the U.S. Both states and tribes are considered dependent sovereigns,
Okay.
so they have to adhere to federal laws. But as a non-U.S. citizen, it's really attractive, right? Because the pass-through income to you isn't taxed, right? Because you're not taxed as a U.S. citizen. So you can
Wow.
kind of
Okay.
have,
Whole rabbit hole. But okay, we're gonna get
yeah,
off
yeah,
the project, so just
yeah,
keep going. Well, we'll
yeah.
do a
So
second. Well, I think I think just the universe brought us together. I feel like someone introduced us, but I know we have the Satoshi connection. But you obviously are very interesting and have done active real life things that I probably want to pursue in a separate podcast, in addition to this one. But go ahead.
yeah, definitely, definitely, and like uh, uh, I have a lot of close friends that are really active in special economic zones and innovative like governance, little city states, all kinds of cool projects. So like as whenever you're wanting to go down that rabbit hole, I'm happy to hop on or even bring
Okay.
bring a couple people. So yeah, so the special economic zone component really helped to drive my interest and demand in policy, right?
Mhm.
And how that can level up the impact that a company can do. And so, after doing all these things in tokenization, after doing all these things in policy, kind of spent a lot of time in Abu Dhabi Global Markets setting up their Web3 ecosystem with Hub 71, spent a lot of time in Africa, Nigeria, Kenya, Argentina, and El Salvador. So pretty much all around the world,
Okay.
really digging into kind of policy and looking at innovative tokenization projects. And so about 2 years ago, I decided what I really wanted to do was to be able to create real world assets that were largely unregulated, right? Like I wanted to find a means to bring real world assets forward that don't have to be gated, don't have to be KYC'd, and can exist really like crypto, fully
Okay.
permissionless, entry and exit. And to do that, I had strong legal and regulatory questions that I had to figure out. So a good friend of mine, Joel Teltner, is this chief legal officer of IOHK, the Cardano blockchain. Um, brought him to Salt Lake, sat him down, and was like, "Hey, I want to do this. How do you think I can do it?"
Mhm.
Uh, and then ended up bringing in some ex MakerDAO protocol engineers that joined the team. The previous lead protocol engineers, our CTO, and some other kind of people that I trust and have been doing stuff for a long time, and kind of posed the question, and we ended up building it. Right, we really fell into digital commodities or commodities in general have a different regulatory scheme in almost every jurisdiction. And
Okay.
if you start to look, there's really only three digital commodities, that have largely been adopted to date, right? It's Bitcoin, Ethereum, and carbon. And carbon itself has, it's a ledger ran by a state, or it's a ledger ran by someone that's verifying the
Mhm.
carbon.
You're talking about
And
carbon
carbon really
credits?
carbon credits, yeah, yeah,
Okay.
carbon credits, yeah, yeah. And for better or for worse, carbon credits haven't necessarily had the best launch in crypto.
Yeah.
And so I was approached by our partner KraneShares, and they posed this RWA to me. So I wanted to kind of dig a layer deeper and figure out why it had been so difficult for all these crypto projects to be successful at all, right? You know, you had Flow Carbon, which ended up having returned money. KlimaDAO had some issues. You know, there's a really big loss in value, um, and there's still a lot of these carbon projects are still pushing on and pivoting and figuring out how to be successful. But all of them to date had been focused on what they call voluntary carbon. And voluntary carbon is a guy owns a forest in Brazil,
Mhm.
and that forest is verified by some independent agency on a paper and then tried to be sold to other people, right? Hard to be fungible between each other, the types, whether it's a forest, whether it's
Right.
biochar. It's pretty difficult, right? And the total asset size of this market, the voluntary carbon market, is like 2 billion, 4 billion on the highest estimation, right? It's not nothing, but it's not really big enough to warrant as much interest as it probably has gotten, right? Then there's what they call compliance carbon, and these are issued by sovereign nations, right? Whether it be states or countries, EU issues them. That market,
I'm sorry, to
it's
be clear,
managed
they're issued within those jurisdictions or by those jurisdictions?
by those jurisdictions.
Okay.
Correct. Yeah. So the programs are owned by sovereign entities, and they require the companies within their jurisdiction to offset their carbon, comply, buy these things, and effectively burn them. They call it retiring, but it's a buy and burn of billions and billions of dollars a year, which maintains utility and price for these commodities.
Mhm.
Um, so that asset class is 950 billion. It's almost $1 trillion.
Sure.
It's a pretty massive asset class, and of those, the one that kind of stood out the most is actually California carbon credits. So California carbon credits have a really interesting kind of price dynamic
Mhm.
where they have a floor that rises CPI plus 5. So you have an $80 billion asset class with a futures market that trades hundreds of millions of dollars a day, so really deep liquidity, right? Without really significantly affecting the price. And
I'm gonna stop you. I want you to talk
no,
to me like I'm 5 years old. When you have a carbon credit trading and that carbon credit is issued by the sovereign, where is it trading?
ICE, it's called ICE, Intercontinental Exchange. It's one of the
Okay, I've heard of
largest
it, of course.
commodities exchanges. So it's just typically like you would go trade oil or um,
So
gold or any
it's
other
that
large
liquid and
commodity.
that deep. It's on a traditional commodities exchange. It's not a
Yeah,
centralized.
exactly. Hundreds
Okay.
of millions of dollars a day are traded.
Okay, that's
Um,
and
for,
do
for
sorry, and do all sovereign issued carbon credits tend to trade on these formalized regulated commodity exchanges?
yes,
Yes. Okay,
yes,
very interesting. All right, go ahead.
yeah. And so the one of the most interesting thing about California carbon credits is they have a regulatory price floor implemented by the state of California. That means these things will not trade and go below a certain price floor, and that price floor raises on a yearly basis by consumer price index plus 5%.
Okay.
So it's an inflation resistant asset. Inflation goes higher, the price floor goes higher, right? It also, on top of that, it also provides a guaranteed kind of price increase, let's say approximately 8% a year on the floor of it. So, which means it's a great collateral, right? If you want to use it in DeFi, you know your exact liquidation price that you'll ever get, right?
Yes.
And it makes great collateral. You can loop it, you can do all kinds of stuff.
Okay. And
Uh,
again, a 5-year-old question. So who's guaranteeing that floor? Is it the state?
so the state of California
Mhm.
has about $5 billion in redemptions a year. So the buy and burn component of these
Mhm.
assets, their companies last year did $5 billion of that. They bought them off market or at auctions,
Mhm.
which are the market's independent futures market, and the auctions are run by the state. And 5 billion of them have been retired, which
That's
means
fascinating.
taken completely out of circulation. Those commodities no longer exist anymore. So
And
like
is there a danger of a George Soros moment where someone shorts the credits and breaks California?
I mean, it would be really hard, right? Because the entire economy has to buy them off of the market, right? Then the $5 billion of purchases have to be bought off of market or at auction, and if the price floor is below a certain price, the state will not sell them at auction. So they have to buy them off the market and push the price back up to parity.
This is a fascinating area, and actually that's a good way of distinguishing. Of course, no one had to buy the pound when they
Yeah,
got the European monetary mechanism or whatever that was, and the Germans didn't come to the rescue. So and I see where my analogy falls short. Right. In a sense, you have a captive market. If you want to do carbon, I'm guessing if I understand correctly, if you want to do carbon emitting activity, you have to buy these offsets. Yes, and so there is a captive and forced market. If you want to play, you have to buy these things.
yeah.
So
It's like a tax, a required tax, but it happens to be a commodity.
So you're doing two things that are awesome that I kind of wanted to get involved in before you actually did it, which makes me question my life. You're doing the Indian reservation regulatory arbitrage move, which actually occurred to me back in law school. I wrote my thesis in law school on this topic, but it was relating to gaming and gambling back in the day. I think maybe before you were born. And then you're also doing the tokenization successfully, it sounds like, and you'll get to it, of these carbon credits.
Yeah,
And you know the exchange mechanism.
yeah.
And,
And
and
the
providing
thing
a
is,
market-based solution to what is an environmental challenge.
yeah, and to be honest, like it is a feel good asset to those that really care, but at the end of the day,
Mhm,
it's an amazing financial asset, right? Like you have a regulatory price floor that's doing better than bonds, right? It's 8% a year probably.
mhm.
And you have a really deep liquid market that you can move in and out of really at any point. And for crypto's sake, these are digital commodities. So the ability for people, like, and I'll show you when we do our platform, the ability for people to get these,
Mhm,
all they have to do is not be on, a blacklist, right? They just have to go to the app with USDT, drop the USDT in the contract,
mhm.
and then they get effectively a warehouse receipt for California Carbon Allowance.
Okay, and the lawyer, just because I'm in Dubai, and the lawyer in me is asking, is it just USDT? Because Europe has an issue with that, and we're using USDC a lot with our European people.
Yeah, single asset collateral right now. I mean, so previous to this, I did bank issued stablecoins. So I got really big into like evaluating stablecoins across the board and just understanding the differences and the depth of liquidity for USDT and also just the profit that they've been making makes it a really high quality asset.
Well,
So
like I gave you the warning, I'm gonna interrupt. So my
yeah,
issue isn't with Craig Sellers or Brock or USDT. USDT is great. My issue is that because of MiCA regulation, USDT is not really accepted in Europe or used in Europe. And for European investors in your platform, maybe that poses a challenge since USDC and other stable coins are under MiCA. That's the point I'm making.
yeah, absolutely. And we've built liquidity pools for USDC, so you can go to Uniswap with USDC and trade into CANA, right?
Okay,
Which
got
is
it.
the token. And over time we may expand the collateral, but for launching and resource purposes, we really just focused on one.
Okay, fair enough. Okay, so this is fascinating. So your on-ramp isn't necessarily sending a wire from your bank. You can be doing USDT directly in, getting your credits, and so that opens up an entire crypto market.
Yeah. So and it's a flywheel, right? Like there's no onboarding that you don't have to go through an extensive kind of KYC and due diligence process.
Sure.
We really do like KYT, which is know your transaction to
Yep.
validate that people are, not high risk individuals from an AML perspective. And from there on, it's their ability to be able to issue permissionlessly. So the same way you would connect to Uniswap or any other, decentralized application,
Mhm.
this is fully permissionless. And in fact, it was the first kind of, fully permissionless real world asset brought to market. No allow list, no gates. It was, traditional.
As they would say in Dubai, alhamdulillah. All right.
Yeah. Yeah.
MashaAllah. Very good. Very good. Okay, very impressive. I normally don't do this, but go start sharing your screen and show us. This is
Yeah.
fascinating.
Yeah, absolutely. So let me pull this
And I'm
up.
gonna get, dear viewers, I'm old. I'm putting on my glasses. So if you lose my eyes, focus on his screen.
Um,
Okay, that's
so this is, as you can see, I just connected my wallet.
mhm.
Um, you can
But
connect
go step by step for us dummies. Like MetaMask or anything like that can connect up.
anything, any wallet you have. We have both Wallet Connect and just direct integrations with, like MetaMask and stuff like that. So any wallet you have, typically you can connect with a dApp. You can connect here, and once you're connected, you'll kind of see this right here. And then from there, the market's open. You decide if you want to mint or redeem.
Hmm.
There's a whole bunch of information that we keep on this side. This is going to have a deep dive. The dossier is a deep dive and due diligence information that you would need. It's like looks like an investment bank deck from Wall Street. There is our info dashboard, and
Hmm.
this is pretty cool. This is we're providing real time market data from
Hmm.
the California Carbon Allowance trading market, so you can see the NAV. You can also see supply and how it's operating. And transparency, verify, don't trust is like one of the core principles for me. And I think a lot of issues in both in crypto as well in traditional finance has been uh, due to accountants reporting the wrong thing. So
Well,
though we have,
there's two things, right? There's the trust me, I have the assets issue that USDT ironically used to have.
yes, yeah,
And
yeah, that,
then there's maybe they were trust me, maybe they weren't. And then there's the okay, I know what you have, but I don't understand it because I'm using legacy measurement mechanisms, and not necessarily mark to market in a proper way. So one is
yeah.
a transparency at all. Another one is the issue of data interpretation. Yes?
Yeah, exactly. So, and that's where on the back end you have accountants putting things together and saying, okay, this approximately equals this number. So if you look at like proof of reserves generally,
Hmm.
like if that is put forth, the chain link proof of reserves, they only issue one number, right? It's accountants adding numbers together and pushing it forward. From our
Hmm.
perspective, we took directly from the core banking of MUFG, got reports, and we post it on a daily basis. So you can
Okay,
see
I'm sorry.
that
You took it from where core banking
uh,
of.
MUFG, sorry. Our administrator for what we call
Mhm.
our warehouse facility is MUFG. It's a top 10 bank in the world. So we actually have like a bank administering what we call our warehouse. So these tokens are warehouse receipts, and we have like a high level of scrutiny. Like you can see here, KraneShares is our partner in this. We have Maples, Deloitte, and the state of California, which is providing custody for these. So, um,
Okay,
and go ahead.
warehouse receipts as a legal term of art or literal warehouse receipts, and can you explain that concept like to a 5-year-old?
Yeah, absolutely. So the best way to think of a warehouse receipt is very similar to a coat check, right? There's a single commodity or a single asset. Often these can eventually be fungible, right? Like in a coat check, it's not really applicable. They're not all fungible, right?
Okay.
But you deposit into a warehouse, they give you a ticket. That ticket is considered a warehouse receipt, your right to redeem
Hmm.
whatever's in the warehouse that belongs to you. So in gold, a lot of people buy gold in these like, gold tokenization programs or
Yeah.
otherwise. There's those tokens are actually giving you a warehouse receipt to redeem the gold from, let's say, a secure warehouse where they're all holding it, right? In our particular case, we have a digital commodity. So we can't really per se give like there's not a physical warehouse. So we had to build a really robust structure because what validates warehouse receipts and what like the most scrutiny that these come under from like a regulatory perspective
Hmm.
is what is the quality of the warehouse you're housing them in, right? Are you verifying and making sure that these things are there? Are you making sure they can't be stolen? Do you have like security, so on and so forth? So so there's a warehouse structure, right? In our case, it's administered by MUFG, and then the warehouse receipt is the token.
Okay, now let's piece this. So we're talking about a non-physical, intangible digital asset. Is
Yeah.
this, is it a, I'm gonna try to find the right word. Is it a condominium of discrete wallets in your warehouse, or is it a pool where you're getting assigned a slice, but that slice may vary from time to time? Or what's the right analogy I should use in my mind?
Yeah, so closer to the pool, right? So in warehouses, like when these are done for gold and other stuff, it's not that you own one specific bullion in that warehouse, right? You have a right to
Actually,
redeem.
I don't know. I honestly don't know. I can
Yeah, yeah.
see I
So
can see
in
both models. Okay.
most cases, you don't own one specific bullion in there, but it's your right to redeem
Hmm.
one bullion from the warehouse, right? And
Okay.
that they all have to be equal quality. And in this case, they're 100% fungible. They're all equal quality because they're all California carbon allowances issued by the state.
I can see that working more accurately with digital assets than with physical. I think
Absolutely.
for
Yeah.
physical gold,
Yeah.
you have
It's
to have
much
almost the
harder to
same
do with
planner,
physical.
right? And same stamp. Um,
Yeah.
okay,
And
okay, so in this case, the pull mechanism makes sense. Now, does the fungibility of it lead into securities law territory, or is this um,
it's
or does the
commodities
warehouse
law.
receipt nature of it kind of obviate that?
Yeah. So warehouse receipts can only be done for commodities.
Okay.
So that would fall under CFTC, not SEC, right? So, which finds a whole new regulatory framework. And then warehouse receipts, surprisingly enough, are mostly unregulated in every jurisdiction. Now, they do have some level of oversight. And again, the scrutiny and oversight is the quality of the warehouse
Hmm.
and maintenance of that warehouse. Hence why we spent, so much. We brought in a bank to be the administrator, right? Like versus
Yes.
having some third party just sit there and hold them, right?
Some guy.
Yeah, some guy, some kid's account.
Yeah.
And sorry, I
Okay.
use the term kits account. That's the compliance account with the state of California that allows you to take physical delivery of these.
How do you take physical delivery of a carbon credit, or is it you're taking physical delivery of a warehouse receipt?
No, so we have to be able to take physical delivery of the California carbon credit. And physical delivery is a weird term for a digital asset. And it is literally just a settlement on a ledger to an account. And this
Okay.
is a large reason why compliance carbon has been so gated and why we really haven't seen it in crypto, because it's not quite like getting a Fed account, but you're looking at putting $1 million in 1 to 2 years
Hmm.
just to get in legal and compliance, just to get one of these accounts with the state of California. It's a pretty high bar. And without know-how, you wouldn't invest that money unless you had to comply with the state of California.
Okay. And you've done it or you're doing it?
We've done it. We've done it. Yeah. So
Well done.
yeah,
Fantastic.
yeah. It was we're
Well,
really
well done.
we're really fortunate. Our partner KraneShares, they run about 14, 13, 14 billion in ETFs.
Mhm.
China is a big one for them. Carbon is another big one for them, and they have the biggest distribution on public markets of carbon ETFs and of the like. So they
Now,
were
now
able.
let me ask you something else. I
Yeah,
understand your statement that warehouse receipts fall under the definition of commodities and not securities. This, as a securities lawyer, that's how I got into crypto. We'll get to know each other better later. I'm aware that there's exempt transactions and exempt securities. I understand that definitionally we're talking about a different category, but my understanding also is that state issued securities are not subject to federal securities law.
with their
That's an
blue sky
exempt
laws,
security
right?
class. Does that at all
Blue
apply
sky
here?
laws. So so typically, just because it's commodities, you throw out all SEC laws, right? Like if it's a
Okay.
verified commodity, you're in a whole different
Sorry,
regulatory class. Like
we're gonna do the interrupting thing because you actually got me really kind of
yeah,
excited about this. I understand commodities themselves aren't securities, but sometimes you build securities out of certain commodity
commodities.
structures.
Yes,
That's kind of what
correct,
I'm getting at.
correct. Yeah, yeah. And a warehouse receipt, because it's a one-to-one pay, it's a one-to-one item. It
Hmm.
is considered a commodity, similar like a futures is, right? Like a future is considered a commodity, even though it's a derivative. Now, if
Okay.
I took a fund and I created a share class, and each price of these tokens were in a share class, now we're starting to tread into ETF, securities framework, stuff like that. And
Okay.
to
Fair
answer
enough.
your question, with the blue sky laws are not applicable here because blue sky laws are typically securities trading within a state, right? So it's like a state issued security and it's traded within a state. But not to dive back down a rabbit hole, blue sky laws become really interesting when you have a digital economic zone with a tribe on a basis because you can locate everything within a state and starts to kind of give you some arguments
Oh my
for
God. So maybe there's a stack coming here. I mean, you're alluding to it. uh, California issued or regulated carbon credits issued from an Indian reservation in California.
Well, I mean, to be honest, like the may be beneficial, right? But at the end of the day, like warehouse receipts are um, pretty much unregulated throughout the US.
Mhm.
So you would be in a really safe kind of regulatory like sphere just to deal in warehouse receipts, right? And in most jurisdictions, like even if you're looking in the UAE, again, all these regulatory like regulators in most jurisdictions throughout the world will look at a warehouse receipt and make sure the quality of the warehouse is good. And if you're not scamming people, right? Like that's kind of the main focus, but you don't have to go through like a full regulatory process.
So
So,
I got it. Now, how did you scroll back down? If you don't mind, scroll back down to your partners. How did you
oh yeah.
piece together? I love your vision, and I love how you obviously had thought and compliance and actual build challenges. How did you slice? How did you identify what had to get done, and how did you slice responsibilities, and how did you find the matching partners, just from a project point of view?
So, I mean, like to be fair, part of it was kind of luck, right? Like,
Oh,
I've been hosting kind of roundtables with regulators and investors on
Mhm.
crypto as a means of like expanding things when I do stuff in a jurisdiction. So I've been hosting them in the UAE. First started with Hub 71 and the Web3 ecosystem building there, and started hosting them beyond that, right? Like within the UAE, and I hosted one, and the John Crane happened to be at one, and he's
Sure.
like, "Do you think we could tokenize carbon?" And I was like, "Well, I mean, immediately I'm thinking, well, it hasn't been so successful, but I
Right.
do see that it's hard to access. I do see there's verifiability problems and fungibility problems and liquidity problems with these markets. So let's dive deeper." And then that eventually opened up the whole compliance carbon market, like I said. And KraneShares brought in these Clear Sky is people they work with, and
Mhm.
these guys are the top experts on this stuff, right? So they've set up multiple fund structures for ETFs to be able to get into this physical compliance carbon,
Mhm.
and they brought forth a really robust structure to be able to do this that was already approved by the regulator. And then I layered on the token and regulatory wrapper and kicked it off from there. So a little bit just happened to be that John Crane came to one of my roundtables and we kicked it off and had a relationship going from there, and then we're able to dive deep with the top subject matter experts in the world on this stuff.
That's interesting. And did you have a law firm guiding you through this? And do you want to give them some credit, or was it law-like individuals?
So, I mean, my top lawyer that I use for anything is going to be Joel Teltner.
Okay,
So
very good. But you can give
he's
them a shout
just
out.
yeah. So I always do. Like he's absolutely brilliant. He's right now working for Charles Hoskins, doing the Cardano stuff, but
Okay.
he's kept me on as a client over the years. So I always use him. But I mean, these guys use Latham and Watkins, like all the top law firms, right, to like establish this stuff, like on the back end, the
Mhm.
legal structures, all that stuff.
I think I hear my wife and 9-month-old baby coming. So this may be a very informal podcast when it comes to that part. Um, in fact, they're at the door. So for everyone watching, bear with me. I got a baby, so otherwise I wouldn't get the door in the middle of a podcast. But marriage calls. So give me a second.
Yeah, go ahead.
I'm on a podcast and recording. Oh, there you go. The domestic bliss. I won't even
Yeah,
edit that out.
all good.
Okay, so all right, so show me more.
Yeah, so this is a fully permissionless platform. We're really super fortunate. Our CTO, Brian McMichael, had so much experience over 4 years of building MakerDAO to what it became.
I'm sorry, no,
Uh,
the wrong direction. It says powered by Maser. Explain.
so Maseer is
Maseer. Okay.
the company that we're CEO of. Um, Maseer has built a tokenization company, uh, incorporated it in Abu Dhabi Global Markets, and CANA is our first RWA. And it kind of
Got
met
it.
those requirements that we're focusing on, which is really high quality, great financial dynamics, earning potential, and ultimately compliance carbon. Any asset class that we look at has to have more than $100 billion in it and have a liquid secondary, right? Because we need to be able to enter and exit Because that's important to crypto. You know, a lot of people have been focused on real estate development projects for tokenization, but
Mhm.
at the end of the day, who in crypto wants to hold a token for 5 years? It just it just doesn't really work in our brains. Like I don't know where I'm going to be in 5 years, but
No.
it's never going to be
The
where
only
I
thing
am
I
at
want to hold it
now,
for
right?
that long is Bitcoin, and not
Yeah,
on market.
Bitcoin, fair. Bitcoin and Ethereum, if that's your answer, you know, maybe for some people XRP and these other
Mhm.
ones, but Bitcoin for sure.
Yes.
So with this, you go into mint.
Hmm.
You can see you have a balance. There's a mint price and
Yes.
there's a NAV price. So our business is there's a NAV price, which is the futures market price, the close
Mhm.
of the last day, and there's a mint
I'm
price.
sorry,
Our
I gotta
business
ask.
is
You just net
good.
asset value or what's NAV?
Where NAV?
Yeah.
NAV is actually the futures price. So that's the end of day futures price. So that's the net asset value, correct? For one California Carbon Allowance is
Okay, got it.
32.7 USDT.
Okay.
Mint price is a little bit above that. We charge a little spread. That's how we off ramp the crypto, pay for the
Mm.
warehouse, all that kind of
Mhm.
stuff. So I just pick how many Kana tokens I want to receive. So can do two, um, and that will be 66.70.
Okay.
Mint Kana tokens. And with minting Kana tokens, just going to
Mhm.
begin the signing process.
Mhm.
Oh, I got to connect my wallet.
Mhm.
Second.
Don't display any private keys, okay? Mhm.
Um, try again.
Mhm.
My wallet was locked. All right. So
Did you pass your own email?
begin signing process.
Cool.
So I'm going to approve the USDT,
Mhm.
process the mint. Gonna take a minute to take into effect.
Yeah, I was about to ask, do you have to check that box?
Transaction successful. Yeah, you have to check the box usually to get
Okay.
this thing
I
to
like
go
your
away.
English. It's very clean.
Yeah, great job. Again, all done
Mhm.
by the wonderful team we have. So,
Mhm. Yeah, you
um,
may see me holding him 9-month-old baby in a second just to calm him down while
oh,
we.
that's fine. Yeah,
Okay. All right.
cute.
Mhm.
So transaction successful. Now I have Kana in my. You can see I have Kana. I have about 22 Kana
Okay.
in my wallet and some USDT. So, and then similarly, if I ever want to redeem, it's just fully permissionless. Go through the same process. And
And is there off ramp to USDT?
yes, everything. So the USD, there's a 7 day cooldown when you do a redeem,
Mhm.
right? Which allows time to sell futures, turn it to cash, turn it to USD, and fund the contract.
Mhm.
But also, any sort of mints that come in during that period are automatically allocated to redemptions. So, let's say someone comes in and mints you with USDT, and someone else redeems. In 7 days, they can redeem that USDT that came in from a mint. It's automatically allocated. So it's a fully permissionless interface. It doesn't require any gates for you to go through. Um, yeah, and that's it. I mean, we
And
obviously have.
is the back end that, for example, the mint redeem logic and cooling down logic you just described, is that programmatic? Is that on chain?
It's
Like,
on chain. Yeah, that's all smart contracts. So
okay,
it's
what's your
fully open source.
maybe you said
What's that?
you're on Ethereum or
Ethereum mainnet. Yeah.
okay,
We've
good.
bridged to other chains, right? Like as we're doing like go to markets for Base, Arbitrum, layer twos, and stuff like that.
Mhm.
But our core protocol is built on Ethereum.
Okay, and is the warehousing of the receipts, quote unquote, is that on chain or is that with that company's structure?
So the only way you can actually custody these things
Mhm.
is with the California's account, which isn't on chain, right? Like
Is
it's
not.
just a digital ledger run by the state of California. And it's called a KITS account. It's like Compliant Information Trading System or something like that. And that's off chain. Now we do represent that through Oracle's on chain, like I showed on the transparency dashboard. So you
Mhm.
can see real time how many contracts are there and what is the total amount of CCAs
Mhm.
that are held in collateral on a data end of day report kind of basis.
Mhm.
So we do bring that data on chain, but at the core of it, it's actually resting on, say, the private ledger run by the state of California.
Okay, and is that an API call to that ledger, or how are you doing that?
So our administrator observes all of our assets, right? And they get it fed to their core banking system, and we
Mhm.
receive it from their core banking system. So our futures contracts, when we buy and sell in the futures market, cash positions that we hold, and physical carbon we hold in our kits account is all observed and managed by a highly regulated and scrutinized entity, MUFG.
Okay, and then the is MUFG interacting? I'm just wondering. It's interesting because you're bridging, you're weaving together several interesting technical regulated areas, and you have a token which is obviously on-chain. You're using Ethereum. You're doing oracles for the data collection and real-time sort of dashboard of assets, which I think is fascinating. Of course, the last mile problem it would be bridging the on-chain representation with sort of the quote unquote legacy or alternative state government structure. And you're using this regulated, reliable intermediary in the middle, which is great, provides a lot of reliability. There's there was two thoughts that came to my mind. There's the beneficial aspect, which is you have fire blocks. I mean, not the company, but you have kind of a division of responsibilities between these entities. So even if the front issue hypothetically has a security issue, it's not necessarily going to permeate to the back end. So
Correct.
I'm
Correct.
appreciating
Yeah.
that aspect. And but I'm also, because you were talking about the bridges, I'm aware of the security issues with bridges sometimes, and when you start weaving together systems, you get, layers of complexity. So on one hand, it's nice to have everything on chain and automatic and programmatic and no entities mediating between you and the ultimate asset. But on the other hand, it's kind of maybe good to have some breaks in there. I just want to get your design. I want to know your practical reality and how much of that is design philosophy and how much of that is because you had to do it this way.
Yeah. So it's very similar 50-50, right? So like with real world assets, it's extremely difficult, near impossible, right? To
Mhm.
bring everything off chain on chain because there is regulated entities
Yes.
and you're not going to go into a tier one bank and get them to handle crypto custody in anything less than 3 to 5 years, right? It is an insane, like just the operations, the policies, the inherent trading, all those, and the amount of different boards you have to go through to be able to get that. Like I did bank issued stablecoins previous to this, so I had a lot of experience, particularly selling to the biggest banks in the world and trying to see how quickly they could implement new things, and it takes significant amount of time. But what they are great at is being able to operate and custody assets in a regulated framework, right? And so, like, if you their reporting requirements, their level of auditing requirements, their random regulators going in and poking around, seeing what they're doing, is extremely high. So they typically do off-chain assets really well. Like, and we'll toss out uh, you know, the problems that there are with banks, which is like fractional reserve, and I think we've seen recently how that's
Separate topic.
a huge mess.
Yeah.
But
Yeah.
separately, this is a custody to asset, right? It's not fractional. It's wholly, it has to be one to one owned, and if it's ever one to one broke, then there's the regulators are crushing them, right? Like it's a huge
I
issue.
mean, the whole point about your warehouse, your earlier point about the regulatory nature of warehouse receipts depends on it being reliably one to one.
Reliably one to one, and the quality of the warehouse, right?
Right. I
It
mean,
like
well, the
has to be
quality
a
of the warehouse
very
is what makes it reliably one to one, right? Because,
exactly,
because
exactly. So
maybe we can guarantee that the object went into the warehouse, but then the question is, what happens after that,
So
right?
what happened? Like, so the off-chain component, what happens after it goes into the warehouse? You have to have a reliable reporting back that it's going in there. In a lot of cases, this reliable reporting is typically would be held at a company level,
Hmm.
and you guys wouldn't really get the level of transparency you're seeing on like our transparency dashboard. And then we would just say, hey, we're 1-to-1 backed, right? Like that's usually the case. And then we would give you an audit report every 3 quarter, every 6 months or once a year, whatever the case would be.
Hmm.
Um, in our particular case, we're actually getting that information directly from that regulated entity, and we're able to drive it into oracleization. So you can see transparently what that 1-to-1 backing is. Now, the benefit of having that off-chain component is if there is, as you said, ever an on-chain hack, right? If there is ever happens, that off-chain component means the collateral is safe,
Yeah.
right? Your ultimate tokens hasn't been, you know, um, uh, your ultimate collateral, your ultimate asset that you invested in
Hmm.
hasn't been attacked, hasn't been stolen. It's still sitting there. So transparency, reliable reporting, off-chain, and the quality of the participant, right, that is doing the reporting, and obviously the detail of the reporting, right? Not making sure that it is more than just one single number. You can actually see, okay, there's futures there that are backing these California carbon allowances, or there's physical there that's backing these, California carbon allowances. Um, and then when you get on chain,
Hmm.
there's a whole different set of security considerations, but from a methodology, you want to be able to make it as streamlined, verifiable, and ultimately for crypto purposes, you want to remove intermediaries
Yes.
and use smart contracts, right? So being able to have really strong programmable interactions, where typically what we're doing now, you would have to have like, I don't know, 2 or 3 more people, intermediaries between us, normally to be able to kind of get full access to this stuff. Now with a programmable smart contract, the terms and conditions are built into the IPFS. Like you can see everything publicly. You're able to one click without any intermediary, right? And that's good for us because now we're not having to interface with 1,000 different individuals
Hmm.
every single time. We just maintain the warehouse and we maintain the security of the smart contracts. So we stay hyper focused as an organization.
I got it. I like it. Now let me ask you, you got that bar across the top about your scaling and contact
Yeah.
us if you need to do a large transaction. What's going on there?
Yeah, so we buy the futures ahead of selling the tokens,
Hmm.
to make sure that they're collateralized at the moment of purchase.
Hmm.
But we're just launched like 2 weeks ago, right? So I think we have a total of 400,000, 500,000 on chain, right? It's not,
That's good.
we're
Yeah.
bringing more institutions into it. Just started, but if someone wanted to come in or an institution wanted to came in, let's say like Galaxy or one of the big guys, Falcon X, they want to come in, they want to mint 10 million of this. Well, we have a robust structure with MUFG being an administrator. We could mint 100 million, 200 million tomorrow without an issue, right? But we wouldn't be able to do that permissionlessly on here. We have a cap based off of the amount we have. So like if it goes over, someone's trying to buy over 250K, because we haven't bought the futures yet, we would ask that they contact us, and then we would go through like more of an OTC kind of institutional process to onboard them.
Got it. And is the original issuer, is there unlimited supply potentially, or is there a limit to the
There's a
number of these
cap on
carbon
each
offsets?
account.
Say again?
So this is yeah, there's a cap on each account, the kits accounts. The max you can have is effectively roughly $300 million, right, per account. But because of the structure we've designed and because of our partners, we can actually secure more kits accounts
Mhm.
to support in warehousing. So once this one fills up, we can open a new one. They also have access to other forms of compliance carbon. We're focused on California. China's going to be releasing one soon. That's going to be a huge economy and opening. There's some in the Northeast. There's some in Washington. There's the EU. EU is the biggest one to date. So there, we also have the ability to kind of scale laterally into other compliance carbon as it's interesting, and provide that in using a similar warehouse structure that we have in this one.
And is that warehouse receipt legal concept sort of a globally understood
Yeah.
carve out or understanding that this is a commodity sort of thing?
Yeah, absolutely. Yeah, it's pretty much every jurisdiction because every jurisdiction has warehouse for ag. You're right, like you're let's say you're an ag distributor that you're bringing
Like
in
ag,
warehouse, you're
like
warehousing the
agriculture, or
commodity. Huh?
you said ag.
Yeah, like agriculture. Sorry,
Yeah.
agriculture. Like so, like an agriculture warehouse
You're
receipts
using
for
a
grain
hip
crop.
commodities term. I didn't
I
know.
know, man.
You,
I
you,
know.
you, you hipster. Okay. If you
But
said
like
farm, I would know,
agriculture,
but I'm like
gold.
ag. Okay, probably agriculture, but let me make sure.
Yeah. Agriculture, gold, silver, oil, right? This is used all over the world
Hmm.
as a means of people warehousing, futures trading, as people warehousing different other demands. So, like, I'm not gonna take delivery of all of my oil. I need to store it in a warehouse for a period of time. I need to go to someone that provides these warehouses, and then I deposit it and get a warehouse receipt. So super common, and like I said, pretty much one of the lowest regulatory bars in the world, right? So it's very interesting.
So can
Very interesting.
I, with the logic that you're exposing on chain,
Yes.
can I make it a synthetic blended asset of many of these tokens and represent that as a new token that I issue?
Sure. Absolutely. I mean, that's the best part about this. That token
Mhm.
that we issued is that you can do anything with it that you would be able to do with a stable coin, right? It's an ERC20.
That was my next
It's
question. Okay.
fully permissionless.
Mhm.
It's fully fungible with other of the tokens. And the best part about it is if you wanted to use it as a building block in DeFi, that is the purpose why we designed it this way, right? Like you want to put it into a morpho pool and loop it up and get as many of that CPI plus 5 because you know there's a floor price.
Mhm.
That's on you, right? Like and we're building and launching those integrations on a daily basis across broad range of DeFi protocols.
Mhm.
People are using this as collateral, backing stable coins, right? It can similarly, like if you think of MakerDAO, they initially started with Ethereum as the primary collateral. They added stable coins. Now you have a whole new set of them, right? So as more of these, like right now we have a lot of gold tokens, right? Like you think Tether Gold, stuff like that,
Mhm.
operates similarly regulatory framework. Let's say you want to do 50% CANA, 50% gold, and you want to arbitrage the balance, the CPI plus 5 balance with, a speculative gold component.
Mhm.
Or you're looking at the futures market and California carbon allowances, and there's some really good speculative news that's going to be coming out, and you want to blend these two together. Today, you can take them together, blend them in a protocol, and issue a new token, right? That would be, a blended asset, like a derivative of those two.
Interesting. Now, I gave you more time than I expected because it's so awesome.
Oh, thank you,
I'm
man.
actually going to have to head to a meeting soon. I'm saying that on the recording. So, as someone who's residing in UAE, I'm happy to understand that this was issued from ADGM. I didn't know that. That's great. Um, I'm also friends with Ahmed bin Suleiman from DMCC. So, how did you decide there, DIFC, DMCC? What was your decision structure?
Yeah, so when kind of founding the company, I'd been really active in the UAE regulatory system,
Mhm.
and the really prominent regulators that were well developed for tokenization were VARA
Yes.
and ADGM. And ADGM is a little bit more interesting. It's an offshore jurisdiction, which means it has a global distribution base. And it also has an independent court system.
Yes.
So ADGM is pretty much the top level as far as special economic zones go. And their regulator has been doing stuff in crypto. I mean, it was almost 5 years ago now when
Mhm.
I was doing a roundtable. Their regulator told me they had already built a smart contract that your DApp could automatically check to see if it's compliant, right? They had already implemented these like very innovative, thoughtful, like DAO regulatory frameworks and stuff like that, years and years ago, right before it
Mhm.
became even like a reality for most components. So um, ADGM was, obviously kind of the first choice, and I think it's a home of some of the biggest funds in the world. It's a
Yes.
great jurisdiction. I'm always, any chance I can get, I'm pretty much saying how much I love ADGM. So
They're great. It's just, there's almost like
and
roll
and
swirl per
DMCC
coin.
has a lot of capability, right? Like I think as far as commodities and a lot of activities that they've been doing, I think DMCC is really really push trading and implementations to the next level, but no independent court system, right? It's you have to pick your arbitration
No
center.
independent court. They're under Vara. They're building this new uptown. So they're an interesting bridge between the physical commodities world and the crypto world, and they're building a nice infrastructure. But I agree with you about what's great. You kind of alluded to it. What's great about both ADGM and DIFC, Dubai International Financial Centers, are constitutionally permission financial free zones,
Correct.
and so they're that's quite intentional, right? And
Yeah, absolutely.
they're very exciting that way. And I'm hearing you talking about, here you are. I didn't know this coming in. Here you are, Maser. Am I saying it correctly? Master,
Masir, Masir. So it's
Masir.
based
Oh,
off of
like
in
seer,
Arabic,
like
all
okay,
Masir
Masir.
is
Okay,
like destiny.
got it. Got it. Like the Oracle seer. Okay, so
Yeah,
here, you're making the point that, kind of not your main play. It's maybe your first play. It's a great play, but you're looking at stacking other jurisdictions in here, maybe using this model, and of course to have an offshore neutral Switzerland. UAE is like Switzerland in the Middle East, and then you have ADGM and DFC, which is like Switzerland inside of Switzerland.
yeah, yeah, yeah. With common law, right?
Yeah. It's kind of like, we're in Switzerland, and then those are the cities of London,
Yeah,
if you know what I mean. They're
yeah,
their own
exactly.
they're their own little animals where the queen has to ask permission before she goes in. Actually,
Yeah,
now the king.
yeah, yeah. No, it's great, and the to be to be fair, I think like the whole world was chasing the way that UAE did special economic zones,
Yeah.
right? Like they've really pioneered them in a whole different way and being really independent. So yeah, it was pretty much one of the best special jurisdictions in the world, hands down.
Interesting. When are you in UAE next?
Abu Dhabi Finance Week for sure.
Okay.
So I actually, because we were so focused on building, I had a wonderful 6 months at home, spent time with my daughter, went hiking and stuff, but at computer building. So I'm going to start traveling now that we're up. I'm doing New York next week, and then I'll be back in Abu Dhabi for Abu Dhabi Finance Week and probably a little bit longer. There's just always so much great stuff going on in there.
So you're officially invited to speak at Dubai Tech Tuesdays on December 2nd, and I'll remind you of this. And also, we're launching my event, Dubai Tech Tuesdays, in Abu Dhabi on December 9th.
Awesome.
And we're doing it in connection with Bid Angels, Michael Turpin, and the rest of them. Maybe
Yeah.
also DNA, Scott, and there's some, I'm sure guys you already know better than I do. And we're doing a little bit of F1 and other action before then. So
Nice.
during
Yeah.
during finance week and also during Coin Mina.
Yeah. Yeah. And the Coinmina thing is amazing. That's I don't know if you've been following the Abu Dhabi Blockchain Center, but they've done some really impressive stuff, getting
Yeah.
like common law implemented at a federal level and a dispute resolution of your choice for specific crypto projects is like I was super impressed to hear what they've been doing. But they run the Coinmina thing and or the Bitcoin Mina thing. So yeah, absolutely. I'd love
Bitcoin
to
Mina,
go.
yeah.
So
Okay, so and then let's get you on stage also during all your free time.
yeah, of course, man.
See, and
That'd be awesome.
just for context, we're gonna have 300 high net worth individuals who will be very much into this.
Oh, great. Then yeah, I'm
We haven't
there.
talked about it yet. So our event, we just did number 67 this week. It's a weekly event. I'm not going to name drop the shakes that are behind it, but if you Google us or look at the photos, you'll see. And it's all it's it's a very filtered and elite crowd. I'll send you some links. We'll talk offline, but I think this is a fascinating product. This is actually the stuff I love. You're using your 2 seconds, and then I got to run.
Yeah,
You know, the I got qualified as a lawyer back in 1995. Okay, and I practiced for 5 to 6 years doing business and transactional stuff. I stopped law to start my own computer company, and then went back into law because of crypto and blockchain, and because I got exposed to this stuff in 2014 and became one of the first crypto attorneys and taught myself securities law. And I have all these videos explaining this. And I always say the reason I did that is not because I realized that there's a new area of law and I could be one of the first. I realized that blockchain and crypto and these tools could make law better. Okay, it's not that I could, it was nice to be the first attorney and kind of carve out a niche, but I realized that the things that I found distasteful, slow, inefficient, and boring about law and regulators could be in part or maybe massively addressed by tools like this. So I love that you're taking something that's useful but complex and maybe esoteric, and then providing a series of structural and user-friendly wrappers around it so that here I am, I can just, buy with USDT and be happy.
Yeah.
That's really great. And I can, I'm just getting to know you, but I can see your stacked experiences and connections feeding together nicely with your teammates to come to this point. And that represents what I love about this industry. You know, it's like the jigsaw pieces come together and something beautiful comes out. And here you are doing this out of UAE, but serving California. Mwah,
Yeah. Yeah, it's great.
mwah.
Yeah, full. It's actually a fully offshore structure too. So like, you know, didn't really know where Biden was going, like after Biden, right? So like,
But believe me, no
uh,
one, Biden didn't know where he was going. He didn't know where Kamala
to
was
be
going.
fair, yeah, to be fair.
Interesting. All right, I actually,
Well,
heaven forbid, I have to run to my next thing. Okay, I'm gonna stop the recording. Audience, this is
yeah,
amazing. Okay, this is even better than I thought it was gonna be. This is fantastic. Okay, let me stop the recording.